Welcome to another episode of the Tech Behind FinTech. I am really excited today with our guest, Joyce Mehlman. How are you doing today, Joyce?
I'm doing really good. Thank you. How are you?
I'm doing excellent. So like we always do, we have to officially introduce our guest, and I'm going to do that right now. She has a very interesting bio that I think will be we're going to dive into a lot of subjects. So I'm really excited about it. So let me do that now. Get through the housekeeping. Okay, let's do it. Joyce is a banking professional of over 35 years of experience, concentrated in operations, compliance, and project management. She has worked for banks of all sizes, both domestic and international, and across all areas and products. She has been working with startups since joining Bancorp Bank in 2006 as the COO. Her team supported operations, compliance, customer service, risk, new account openings, wire ACH processing, and fintech oversight for audit purposes. Since leaving Bancorp in 2011, Joyce has formed her own consulting company, iLEX Consulting Group, and has worked with over 15 programs in 5 banks, helping them launch programs and build out oversight needed to support them. In addition, Joyce also mentors as part of QC FinTech and was named to the list of the top 50 inspiring women in FinTech by the NYC FinTech Women Organization for 2019. That is extremely impressive. Joyce, welcome to the Tech Behind FinTech.
Thank you. I'm glad to be here.
Glad to have you. So today's topic is the A to Z guide to starting a fintech. So we're going to dive into that. Like you guys know, with our show, it's the Tech Behind FinTech. We talk about disruptive fintechs. We dive into the technology behind it and also the processes. But before we get started on all of that, as you know from guests that have been here before, we talk about the news of the week. Obviously, we don't cover all the news because that will be more than a show. We cover some of the stories we found interesting for the week. So I'm going to pull it up and start to go for it. The first article, Amazon expands pay with hand tech. So the e-commerce giant unveiled Amazon One last year. It scans a shopper's hand, identifying unique characteristics such as a surface area and vein patterns. Earlier this month, Amazon picked London for its first international cashierless store. Instead of being called Amazon Go like in the US, it will be called Amazon Fresh. The longer-term plan, Amazon is hoping to contract out the pay with hand technology to third parties. I think that's amazing. The pay with hand technology. What are some of your thoughts on that, Joyce?
I think it's great. I love biometrics. We definitely work with our programs to have them use them. I mean, it's just another way of securing your information, making someone who's using that application or purchasing that good to feel that their information is being protected. Apple does it. All the phones do today. I mean, I haven't put in a password and I can't remember how long. I can't remember my passwords half the time. Fingerprint, facial recognition has become so big, and I love the whole hand because, your fingerprints, it's you. I was a criminal justice major and, getting fingerprinted multiple times every time I had to go and do an internship at a jail or whatever it may be, right? That's how they knew me. They didn't even know my name. They knew my fingerprint, right? And so doing that whole hand technology really brings it down to you being you and making sure that unless someone, like in a movie, cut your hand off and uses it to put up on the screen, no one's getting in other than you. So I think it's great. I think it's just the next step in what was going to happen anyway.
And it's interesting, like when people talk about multi-factor authentication, right? It's usually, 2 forms, like your password and then something that gets text to you and right. Some sort of code. But it's different. It's different factors, right? It's something something you are. So that's actually some bio thing right. there, and something that you have, right? Which could be a token in some sense. So. Definitely interesting going into a store and just palming it.
I mean, if anybody's going to be able to do it, it's going to be Amazon, and they have the outlet to do that. I mean, just working, even if they started just in the Whole Foods, right? Just being able to walk up to a register and put your hand down and go, this is me, and your payments process, system, your payment choice comes up, you already have it entered and it's logged and they know what it is, and you walk out and it's paid. I think it's super cool.
So the next article I want to talk about is MoneyGrant and Ripple and partnership two years early. So the payments and exchange firm that has used Ripple's X-Rapid system, now called On-Demand Liquidity, ODL, since 2018. The pair announced a strategic partnership in 2019. The original deal was going to expire in 2023, but now that has concluded. So basically, and it looks like it was due to some regulation issues from XRP and the SEC. So back in December, actually, I think it was our December show, we covered Ripple. They had some issues with the SEC, and that actually dramatically dropped the price of XRP. So you know what? Out of curiosity, I want to see now with this news and what's the current price of XRP. I'm going to check it right now. And to see, I'm just out of curiosity, I want to see if it had a effect on them. Nope, 24 cents. It's kind of holding steady, slightly down, but it's not in the 20s anymore. Real interesting. The CEO said his statement was levels. He blamed regulators for the lack of crypto reg framework, which has needlessly muddied the waters for U.S. businesses and customers. What's your overall thoughts on that?
I mean, I totally agree. I mean, I can't get into the deal and what happened there. And, that's obviously going to be hashed out in many different forms over the next few months. But as far as crypto goes and regulations in general, I mean, there are none. It's still very much an open issue. As a consulting company, we actually don't get involved very often in crypto companies because we don't even know where to direct them. We don't know what is the right thing for them to do and not do. We can give our best practices, but that doesn't mean that's going to hold up if a regulator comes in, because even the regulators don't know what they're looking for. Having talked to a lot of the guys and founders of these types of companies, they're concerned. They don't know if they should go the banking route and make sure they do all of the right regulations as if they were a normal banking program, or if they should be more on the investment side and look at what like an SEC would look at, right? Or it's really tough. It's a hard industry right now. The good news is a lot of the bigger banks are starting to look at this space more seriously. And I think if anybody's going to be able to drive those regulations and force someone to actually create them, it's going to be the Chases, the Citibanks, of the world, the B of A's who want to be able to offer that, but don't want to get sanctioned again, right? Don't want fines, don't want to have their hands slapped. So they're going to force the regulators to actually put something in place that they can live by, which will then start, coming down to us at lower levels.
Yeah, it's interesting you say that. So a few episodes ago, we had the CEO of Niger Crypto. And one thing they did in Nigeria was the central bank authority basically banned Bitcoin, crypto in the bank account. So all the banks couldn't accept it anymore. So that set all the startups into a frenzy. They didn't explicitly say you cannot use cryptocurrency in Nigeria. You just can't transact it in any of the banks. So it just made it very difficult. So it happened so abruptly. He was saying, he was like, so it was an interesting discussion that the way they just applied this all of us, they just added this new regulation out of the blue. So
I mean, it's volatile and banks were afraid of it, right? So
it's interesting because I know one of the things that we reported on and talked about as part of the news article, I think Bank of New York, if I'm not mistaken, they're going to be the first one that you can actually use it through the bank account. So we're going to be looking at that development. So that's for us. Those are the topics you want to discover on the news. Now to head into the main topic of the day, the A to Z guide to starting a fintech. So there. Before we even jump into it, I just want to stress the importance of the industry, right? It's a saying that I love. I heard it the first time, and I always love to say, men lie, women lie, numbers don't. So on that saying, right, North America has 10,605. These are some stats I received for this month in February. North America has 10,605 fintech startups. Europe EMEA, Europe, Middle East, and Africa, 9,311. APAC, Asia Pacific, 6,129 startups. The global financial services market is projected to reach 26.5 trillion by 2022. It's a huge number. So, so obviously with those numbers, we see that fintechs are starting up, right? We have there are thousands. It's happening globally. It's not just domestic, all over the world. There was another stat that I saw that in 2019, 64% of consumers have used 2 or more fintech services or platforms. Additionally, recent fintech statistics show that the COVID-19 pandemic has contributed to an acceleration of cloud services and similar solutions for the industry. So I know last week we talked about that, and we said, when's the last time that you actually into a bank during the last year? It was we did a quick poll, and it was just very interesting to see a lot of people did not go. So where do we start? The A to Z guide.
I think all those points you just brought up are so key, right? I mean, you could have even asked last week how many people have been to a bank in the last 2 years. I can't remember the last time I was in a bank, to be honest. Wow. I mean, I work with big commercial banks. That's where my account is, one of my accounts, and I can't remember the last time I walked into a branch. I don't even know which branch my branch is anymore, to be honest.
Wow.
So, I mean, I think that's just the way, the way people are going, and different generations are doing it differently. The younger generations, especially, they don't care if there's brick and mortar, right? It's just, how do I get things done quickly? And sometimes they don't even care if it's safe, and that's a problem in itself.
That's a bit, of course.
Right. So, and the industry is growing tremendously, and the number of fintechs coming out is just getting more and more every day. And then the amount of money to invest in these fintechs is just insane. I mean, you see the amount of money these fintechs are raising. It's just crazy. Even when I was at Bancorp and, we thought we were getting some really big dollars, we launched Simple and we were like, wow, like this is amazing. Right now, that's nothing compared to what these fintechs are getting today. So, I think all of those are factors into, the industry just growing and maturing and becoming, it's become part of the society. When you look, and I just got an email yesterday from Yale University, and they're doing online courses about fintechs, right? About learning how to do a fintech. There are colleges that are offering degrees now in entrepreneurship, right? And especially around businesses and fintechs. I mean, it has become our normal day to day. When in 2006, people didn't know what the word fintech meant. The regulators had no idea how to regulate us. We actually taught them. It was kind of like crypto is today. It was the wild, wild west, right? Now, you say the word fintech and everybody knows what you're talking about, right? People may use the word neobank. People may still use financial startups, right? But at the end of the day, they all mean the same thing. So, I think it's just become so common, and you see advertisements on TV for them now, right?
Yeah.
You've seen advertisements for Chime, you've seen advertisements for Current, you've seen advertisements for Greenlight. I mean, they're out there. It's not this in a shadow in the corner anymore. And, if you find me, it's because I was online and I did some advertising on Facebook or Google or something like that, right? It's right in your face now.
That's interesting that you say that. I mean, definitely it's permeating through all aspects of environments. I mean, just the convenience aspect from what we're talking about, going to brick and mortar, to looking at it from reg tech to wealth tech to the payment side to different ways to from the transactional side. So this is various aspects to it, and I've always looked at it real simply as just the technology behind money, right? And that's what fascinates me. I mean, even looking at it from a pure big incumbent financial bank, right? Like we both come from backgrounds where we work for bigger organizations.
Yeah.
And one of the reasons why I started this platform is we always talk about the business side, which obviously the business is key because technology supports the business, but there's an army of technologists within that building internal applications for the big banks. Now we're just seeing where, I remember one client, I always remember this, their big thing was, we've been around for 100 years, and right now we have smaller firms eating our lunch. Like, and I mean, even what we just talked about with Amazon, right? Amazon's not by any means a stretch of the imagination a financial services firm, but they are now, right? They're moving in that direction. They're coming out with a coin. Yeah, especially when you have big tech companies infiltrating this market. So, you know, I know from news we covered also, Walmart is going. They're working to start their own. Obviously, want to be competitive. So they're partnering to do that. So the topic at hand, what are the first steps to starting it?
Having a great idea, right? I mean, honestly, that's the first step. And I think what I really love about FinTech is, and you kind of hit it, it's, you know, you can do everything online and it's convenience, but really what is really cool is that you get to choose the organization, the bank, quote unquote, that you want to work with based on your needs, right? There's a FinTech out there for everybody. Whatever your need is, you're going to find the FinTech that actually works with you. You know, whether it's in, like you said, investments, or it's payments, or it's budgeting, or it's money movement across borders, or, you know, using credit versus debit, or building your credit rating because you're new to the country. You're going to find a FinTech out there that meets that need. And, you know, what's really good about that is those FinTechs specialize in that space. So they don't try to be everybody to everything like the big brick and mortars do. They really know their space, they specialize in it, and they're able to give you the best service because of that. So, you know, if you look at some of the programs that are for foreign nationals, they're started by foreign nationals and they've been through it, right? And that's what I always say, even about our team. When you live and breathe it, when you're in that space every day, you understand the issues that people are facing and you know how to solve them. It's a lot different than looking in from the outside and writing a white paper, right? You have to live it. You have to feel that pain. And that's how people come up with these ideas, because they have felt that pain and they know that there needs to be a solution for it. So the first thing is to get that idea, right? And there's still so many new ideas coming out every day. I mean, I just heard 3 this week that are amazing, that I've never heard of before, that people have reached out and said, do you think this is feasible? And so once you have that idea, then it's trying to figure out what the structure is that you want. Right? Do you want to be a bank? Do you want to just be a white label? Right? Do you want to create a service that you then sell to other banks? You know, you look at there are some programs out there that don't want to bring on the customers themselves. They want to build the technology and then leverage that for other people to use, right? Behind the scenes, whether that's white labeling it or they sell it off to a bank. I can think of 3 or 4 instances right now of companies that do that, right? Or you want to be that full service bank to that customer, right? You want to give them that account, that card, that credit, you know, that payment option, that budgeting option, whatever it is. Once you know what that looks like, then it's really finding the right people to help you. Some FinTechs are very lucky and they have that funding behind them because they've either done this before or they have their own funding, or they have bootstrapped it, or they have friends and family. Most FinTechs need to go find that funding. Pre-seed funding is usually where you start, and then you build into seed, and then, you know, Series A, Series B, Series C, and all that good stuff.
So it looks like we have a comment. We have 2 comments from the same person, Renee Small. Let's do an order. Join late, but I heard about the Walmart bank for sure. And the second comment was, that's so true. Being in the space and feeling the pain will make you want to improve the process.
Yeah,
100%.
I mean, and we've all done that. Anybody that worked for a big bank, we felt that pain, but we didn't have any ability to fix it. When I was in the branches, even as a teller, I felt the pain of my customers who couldn't get done what they needed to get done. But what was I going to do? Go to the head of Chase Bank and say, "Excuse me, you need to fix this"? Like, it didn't work, right? Now,
I want to stop you right there, Joyce. You just said something and just kind of it caught me. So you worked your way up from a teller to COO, right? So in that transition, you have seen every aspect of working at a bank. I think that's important to note. Like I want to emphasize on that. So it's really interesting. That's an interesting journey, right? Because now, like, looking at the gap. So please let's dive into that.
Yeah, no, it was not what I intended. I mean, I was a criminal justice major. I don't even know how I got into banking. But I think, people used to say, well, banking, crime, and criminals, they go together. So it works well, right?
AML, KYC, all those things. Yeah.
Right, whatever, money laundering.
That's it,
So,
yeah.
right. So, but I started as a teller because I just got out of college. I needed a job. My friend said, hey, Chase is hiring. I was like, cool. They said, well, based on your background, you could get into our management training program, but we don't have any openings today. So as a teller, we'll move you in. And that kind of never happened. So I just moved up through the ranks. I've done everything like from A to Z, literally in banks. The only area I really haven't been in is mortgages, and I purposely stayed away from that. But I've done mergers and acquisitions, I've done finance, I've done regulatory, I've done project management, I've done operations, I've done fraud and risk. I mean, I've just done it all. Marketing, I set rates at Chase, my marketing team that I work with. We set the rates on the deposits based on whether we wanted money in or out. Right. And it was an interesting thing to learn. It was like, I didn't know that you could actually control how much the bank had on deposit based on the interest rates you were giving. Now it's common, but back then in the 80s, I mean, I'm not young, that was very new, right? Business banking was brand new. And I was one of the first business banking centers that Chase put out there at Columbus Circle, which was so cool. And so and then I worked with savings banks. I was with the savings bank that did the very first ATM implementation. Try to get a 65-year-old to give up their passbook. It's a joke. So I've done really strange things. I did the Bank of America Legal Day One merger, right? With Nations Bank. I mean, I've literally been in all areas of it. So it's really, for me, I look at the industry so differently because I've seen all the different pieces, but also it's why I appreciate fintechs even more, because I just so respect what they do and how they can get it done.
So now, to bring it full circle, let's see. Joyce has seen and felt the pain of her customers. Sound like she truly understands what the customers truly from end to end. So now, bringing it back to the ADZ. Now, with that wealth of ground level experience you have, to now going through all the different aspects, and now seeing what fintechs now they're starting and launching, from the idea, from what you said before, right? So just to let people know, like the white labeling solution, right? Are you actually going to, it's different aspects. Can you get something prepackaged, add your own branding on top of it and customizations, and then bring it out? Or do you want to bring it build it from the ground up? Or do you actually want to create a white label that others can consume? So that's what we were talking about when we said that. We have some other comments. Pete, Shishino, Joyce is great.
Pete was my boss at Bancorp. He's a great guy. And I learned a lot from him.
That's awesome. Oh my gosh, he's talking about my grandma and her passbook. I love it. I haven't heard the passbook term in a very, very long time.
Well, I know how old I am.
It's all good. So, but in bringing it back to now the fintech. So now you have those decision points. What's the next step after that? I want to go in a certain direction.
Lining up investors, and Pete, knowing he's on the call, will appreciate this. Our fintechs, we got some great ideas of people coming in with ideas for a neobank or a fintech, but they didn't have the money. And we tried really hard at Bancorp to work with VCs to introduce them and try to get them the funding. But ultimately, it's up to that fintech to be able to do that. And again, you can do it many different ways, but without money, unfortunately, you can't get anything done. Like, I can't even work with you without money. I mean, I would love to, and I do a lot of, work with like QC FinTech, and I mentor people along the way, and people always calling me, just asking me questions. But at some point, I have to pay my team, right? So it's not something I can just do, gratis all the time, right? But that's a big piece of it, and even enough just to get started, to be able to build out some of your tools. Even if it's $250,000, just enough to be able to know that you can concentrate, because you can't do three things at once. You can't work a full-time job and try to do it on the side. It doesn't work, right? So, and then, after your funding, then it's really finding your partners, and that's where I step in, right? So usually I get introduced around that time when the person has found some funding and doesn't know what to do next. Like, I have this great idea. I have some money. Now, what do I do? right? Like, I have this whole big wad of money and, what do I do with it? And I'm like, well, okay, you have to, align all your vendors. You have to design your product. You have to design your mobile app. If you're going to be web as well, right? Who do you want to work with, MasterCard or Visa, right? Are you going to be doing consumer or business or both? Are you doing foreign nationals or US citizens? All those relate to different vendors that program is going to need. Right. And that's when my team steps in. We make sure that we help introduce you to all the right vendors you're going to need, to the bank that you're going to be working with, right, to the processor that can support you for your cards if you're going to do a card issuance, to the networks, and then helping you through your contracts, making sure that you're getting the right price. I actually had one of my very first customers that I worked with when I went out on my own said to me, having you at my table is like having the prosecutor at the defense table. Because
criminal justice major.
Yeah, coming from the banking side, like I already knew, and I knew pricing and, for good or for bad, what pricing we had at Bancorp and what Meta had and all that became public knowledge at some point, people talk, but I also knew where there was some, fluff. And so, when I look at it I'm very fed of the banks I work with, but I also make sure I take care of my programs. Right. At the end of the day, if you're both not happy, it's not going to work. And I always tell my banks, you can get as much as you want up front, but if that fintech runs out of money and they go under, what good is it to you or to them? Right. So pricing them out up front does no good to you or to them. You want them here long term. You want them to grow. So give them the opportunity to get those customers on board and make that money. And, I explained to the fintechs that these banks and these processors, they need to get paid too. They're a business. So as long as it's a fair payment, these are people that support you. You need to know that you need to pay them.
No, so these are all excellent points that you're bringing up, and the various different aspects that one would have to think about. Now, when we start going, we have those relationships established. Another thing that a pain point that I'm hearing from certain clients I'm talking to is now the regulation aspect, right? And just the process and time that's taking just so they can start doing work. Did I skip a step? Because I want to make sure we're going A to Z. So
once you get your vendors and one of them is your bank, right? Then you have to be able to get the bank to approve you to go live, which requires a huge number of policies and procedures that you have to write, understanding what those regulatory guidelines are around the type of program you're offering. Again, whether it's credit or debit, consumer or business, citizen or non-citizen, those all require different policies and procedures. Right, different vendors to support that. So, we spend a lot of time on the regulatory side. We look at all of it, whether it's investments or deposits. Like, we make sure that we're making sure that the program is safe and sound when they launch, and that the bank has no question that they are good to go. Right. So there's a regulatory, but there's also a technology piece. It's a huge technology piece. The reason why my team takes on everything they take on is so that the program can really concentrate on the two things they need to do, which is technology and marketing. And so, right, those are the two big pieces. And without either of those, they're not launching and they're not going to be successful.
And that's like where we stepped in and looking at, all right, how are you going to deliver safe and secure code at speed? So understanding the security posture, understanding how does that play into your delivery cycle, even if you have a white label solution, right? And you have to connect it to APIs, how secure is that? And then when you're finally doing it, is your mobile app actually secure? Do you run some sort of vulnerability testing on that? So, I could talk to that, but I'm now interested. Okay, so now you have those aspects. The companies handling the technologies, or they're working with like a firm like mine to do that. Now, what's next after that?
So they have the technology, they have their regulatory being built out, they're implementing their vendors, things like fraud oversight vendors, KYC vendors, OFAC vendors, right? Transaction monitoring, card embossers, their processor, their network, right? Check deposit vendors. There's so many different vendors.
I was going to ask about that. Like it sounds, we're not talking specifically about any one particular business, whether it's pay tech, wealth tech, but in general, what's the average number of vendors that a fintech is working with?
4 or 5.
Okay.
And now, there is a different model. You could go the model like Marqeta, where basically you work with them and they have everything behind the scenes and you don't get to choose any of your vendors. And for some fintech, that is the right way to go. I've worked with fintechs that have done that, and I've worked with most of my fintechs don't. Personally, and I'm nothing against the Marquettas, the Synapses, whoever Q2s of the world, whatever they are. But for me, I always feel like the fintech should own their destiny. And to be able to do that, you need to have those relationships with your vendors, right?
There may be a technical issue with the audio. Some of us have lost sound. That's not good. I hear Joyce clearly.
I can up my sound a little. Does that help?
I hear you clearly, and you seem to hear me clearly. You did the sound checks.
Okay.
Let's please. I hear you clearly. Usually, if I'm hearing you and you're hearing me, the broadcast should be fine. But Christian, thank you very much for letting us know that. I know on the replay, I believe it's a LinkedIn issue. The YouTube stream is working. Oh, okay. Do me a favor. Let me see something. What I'll do right now. Oh, you know what? This is where we have audience participation. If you can put the YouTube link in this particular chat, it'll be greatly appreciated. If you're on LinkedIn, just put the if you can comment and put the YouTube link in the chat, just in case we're having, that would be greatly appreciated. I don't have it handy. Oh, excellent. Kyle, thank you very much. I love the community. Like, it's just like the whole, everyone helping each other. I love it.
Well, I have to tell you, that's why we're so good. So Kristen, Dana, and Kyle are part of iLEX.
Oh, you see that? Okay.
We are a great team. We support ourselves. We support our clients. Now you can see it firsthand.
I love it. I love the plug. That was awesome. That was awesome. Well, thank you, Christian and Kyle. I love it. Thanks for being part of this team today. So where were we now?
So, the bottom line is, you can do the all-in-one box type of model, or you can do you sign with each vendor. There are pros and cons for both. Speed to market, money you have behind you, what you want to build internally as far as the team goes will help you decide which model you want to use. At the end of the day, I think as you grow, you want to own all of your vendor relationships. So even if you start with someone who does that all for you, I still think at some point you need to own that, because that's how you control your destiny, right? You want a seat at the table with your bank so that they understand you and they know what products you're offering. And if you need some type of exception, they're willing to work with you on that, right? Or understand what limits you have and why you want to raise them. When you have this layer in the middle, you lose that connection. It becomes a problem as you grow. It may not be early on, but eventually it can become a problem.
Without naming names, obviously, can you give me one horror story where that became a problem?
It's not a horror story, but it was a program that I worked with a all-in-one box type of model. Yeah. And it was great. We got to market really fast. We were able to launch a product within 2 months, where doing it all ourselves was going to take 6. And then like a year into the program, we realized that being our own program manager was the only way that we could support the customer base that we had, and being able to make the limits the way we needed to, being able to do some of the KYC and KYB that we needed to do. And it became very clear very quickly that we needed to be able to be our own program manager. And that meant going out and getting our own vendors.
2 questions. One, KYB, what does that stand for?
Know your business.
Okay, nice. I love it. Next, first time.
The beneficial owner rule out there that came into effect last year, where the IRS was a big part of it, where if you own a company, more than 25% of it, we have to KYC you, because you are, you potentially have tax implications, right? So it's not as easy to get a business banking account anymore.
Yeah. Okay. And the next question is, and also I want to be cognizant of your time. So I know you're extremely busy. It's 12:35, but have a few more just to drill down. All right. A few more now with what you just said, right? So I see the advantage of getting an out of the box solution going live in 2 months. How do you now later on start to decouple, right? Because you might say, okay, we need to go live fast. We want to get customers. We want to, this is like our MVP. We get it out, but we're growing now. How difficult is it to start doing the decoupling?
It's not really, it depends on who supports it, I guess is what it comes down to, right? It could be very difficult. It could be easier. So, I mean, for me, what it comes down to is running your production environment while you're running a project. I don't tell people to try to move their bins. I think that's a really hard thing to do. So the bin is where your cards are based off of. It's the numbers on your card show what bin you have. Moving that from one processor to another is a really lengthy, very hard process. So it's much easier to just spin up a new one with your new bank and your new processor and build out that whole program and then just start onboarding your customers there, right? As you're starting to move the customers from the old program over to that one. As cards become due, as you have, initiatives to get people to move, whatever it may be. Some programs keep both running for a while, right? In parallel. So, I mean, it's no different doing it later on as it would be day one. It's the same amount of time. It's that 3-month time period, 3 to 4 months to get it live.
So the biggest advantage is I can go to market quicker, and then I can transition later on.
The downfall is money. You're going to be paying too, right?
Okay.
You've already paid someone to do this and get you live fast, and now you're going to have to pay to get live again, and now you're going to be paying all those vendors while you're still paying the bank in a box because you haven't gotten everybody off of there yet, right? Or you have a contract that we got to get out of. Got it.
I got it. No, that definitely sounds interesting. So another question that I have is, all right, I'm not, a technologist, but I want to launch a fintech. What's my path to doing that?
Getting the right people behind you. So normally what happens is a fintech the idea comes from someone who's either done marketing or business or is got some kind of operational background. And then the first thing they do is they go find someone who could be the CTO.
Got it.
Right? Because they really need that technology expertise. But then they can also reach out and they can, outsource all of their technology needs. There are a lot of companies out there today that will build out your application for you, that will build out all of your dashboards for you, that will build out your APIs for you. It really depends, again, on what you want to do internally and what you're willing to outsource to another company. I mean, there are some companies that won't work with us because they want to bring all their risk and compliance in-house. And that's fine. I have more power to them, right? I wish everybody the best of luck. And then there are some that don't want to spend the money on those types of positions because they really need it for the technology and marketing side. And it's not a full-time job day one. Hiring a compliance officer day one is a lot of money, and they're not utilized 40 hours a week. And more fintechs are realizing that, right? Same with fraud analysts, the same with customer service. I mean, that's why we exist. That's why we have now, you said 15, but that was at the time I wrote that. Now we're over 25 programs that we've worked with, right?
Nice.
So, I mean, it's why people need help. And it's who they look for to get that help.
And you might have answered this, but I want to kind of just emphasize it. What's that core team? What's that core team?
For the program, I always look for is a founder, like whether it's one founder or a group of founders, right, that have the expertise across the product. They understand their product. They understand the market, right? They usually have at least someone who's technology driven, right? That is your core team. I mean, I've started with teams that have 3 people. I've started with teams that have 10. Right? It really depends on the program. And, if you've got 3 people and they are an all hands type of team, they can do the same thing that a team of 10 could do, to be honest.
Oh, I love it. I love it. So we can now start going. Okay, we've been going through the letters of the alphabet. Seems like we went through a lot of different things from the core team to what you need from regulation to understanding that, first getting your direction, looking at the marketing and technology piece. Now we're getting towards the end, where what's that thing? What are we missing that we didn't talk about in that process?
Together, right? It's bringing it all together. It's having your mobile or your web app ready to go. It's having all your vendors in place. It's making sure your business rules were written. It's doing your testing with your processor to make sure everything's working smoothly, right? It's getting your bank to approve you and say, yep, you're good to go. Our risk committee's approved it. We like what you've done. Your policies are all approved. We're ready to turn the bin live for you. right? It's making sure your network has everything in place for that BIN so that it's recognized when you go to swipe your card the first time, because they have to let the merchants know that you exist. Otherwise, your card won't work, right? Even though it's live. So it's bringing all that together at the end. We usually do a friends and family round, right? We do a pre-test and then we do friends and family where it's just literally people we know. We give them white cards, which means they're just cards with nothing on them, just a mag strip and a chip. And basically you go out and try to use it. We test our ACH, so money in and out, right? And then once all that's working and we know we can reconcile and we know that we've got a good handle on fraud, which is a big issue. We know we've got a handle on KYC and that we are following the procedures as we said, and we don't need to update any, then you launch to the market. But you do it in stages. You don't go out and give it to 50,000 people day one. We have seen programs try to do that, and it is a disaster. You need to be able to take baby steps before you can run. And I think that's the biggest issue that fintechs have is they want to be live so hard, so bad, and so fast that when they get the green light, they literally just open the floodgates. And then all of a sudden, like everything that could go wrong goes wrong, right?
I mean,
so there is a reason to do it in steps.
Look, everything that you're touching on, experience from an application and DevOps and release standpoint, continuous process improvement. How do you get to continuous process improvement? You test out with real people,
Yep.
But you don't want to test out with thousands of real people. You want to test out with a small subset. You want to get those lessons learned, and then you want to put it back into your process. Yep. One thing that we've seen on my side is a lack of security testing. It's almost like that's put off, or it's like, yep. Well, you know what, you're launching this mobile app. Have you tested it? And they're like,
I don't want to call them out, but look what happened a couple of years ago, which is why Plaid won't work with some of the big banks, won't work with them, is because of the breach that Aspiration had, right? That was a big issue. And they're not the only ones. We've had a lot of programs that have had breaches, right? Look at Equifax. I mean, they've been around forever, right? Those security is so important. Making sure that your customers are safe is the most one important thing that you can do as a fintech. If you can't do that, you don't deserve to be in the market.
And interesting that you brought that up, because Equifax is obviously huge, so they're going to survive. And they did survive and thrived afterwards. They came out. They were open about it. They made necessary C-suite changes. I listened to what I think both their CISO and the CTO both report to the CEO. I mean, they revamped everything. But when you're now smaller, right, that could be catastrophic in terms of it could just wipe. I mean, so let's look at the different aspects that you just touched on. Your customer, number one, the banking relationship, so your vendors, mm-hmm. and then your investors. Mm-hmm. So, I mean, those three things, I would say in that order, right? It's extremely important to make sure that they're secure. But I don't know, it sounds like some of the conversations we're having that seems to be an afterthought.
It is. Unfortunately, it is. And that's where we always step in. Like when we're working with a program, we make sure it's not an afterthought. It's not something that we necessarily put in place for them, but it is definitely something that we make sure that they have in place because the banks require it, and we test it. And we make, there are some banks that will make you do a penetration test before you even go live. There are some banks that make you be SOC 2 compliant, depending on the type of customer you have, right? You want to deal with card data, you're going to be PCI compliant. And there's no way around it, right? So these securities are in place for a reason, right? And as a customer, I want to know. As a bank, I don't want to be sanctioned. I don't want to lose my banking license because of you, right? And so,
especially as you start seeing, and that's one working with the bank as a vendor. But what we're seeing now, banks also look to expand by acquiring or partnering with these fintechs, and you're only as strong as your weakest link.
Yep.
Right. So if they're compromised, I think back outside of banking, look at Target, their hack years ago was because of an HVAC vendor, right? Like it's so crazy to think about it, but it's like that little small piece that was open became a huge
That's
issue.
why having the right banking partner is so important. And we partner with a bunch of banks, and we've helped a lot of banks get into the space and help them build out their oversight programs. And the reason why Aspiration survived is because the bank that they had moved to made sure that they got their stuff together, and that they put the controls in place that they needed and worked very closely with their local regulators to have them come back in and research and re-review everything and re-examine it. And they passed, right? And they were able to move forward and continue to grow. But that bank was a partner. They weren't just there for the income. They are a partner to their programs, right? And so it's so important that your bank be your partner and not just another vendor. The banking partnership is probably the biggest relationship you have.
That's awesome. Joyce, I mean, you are a person I consider a friend of the show. I want to have you on again. It's just a wealth of knowledge. I'm so happy, because that wasn't discussed in your bio. I didn't know until you just mentioned the tellers, that you're starting as a teller. And I know I found it so fascinating because I'm like, wow, this person, she has seen every single. I came into banking. I was a computer science major. I started consulting at a big investment bank, and then from there. But having that, I started here, and I've seen every single aspect. I find totally amazing, and I definitely want to tell.
I was a teller. Let me tell you, we saw check hiding. I got robbed. I mean, there were a lot of stories.
Oh. You the whole bank robbery thing with the note that happened?
Yeah, I worked for Chase Manhattan on 42nd and 8th. So it was right in the middle of the porno district. And so we had a lot of issues, and we'd have all the we had a money room that we took in probably $100,000 worth of coin a day from all of those stupid coin machines that they had in the porno places. I have some really interesting.
Wow. I either offline, I'd have to explore that. That sounds like I love these type of stories. A last question. What are the factors that identify a good potential partner?
So it depends on the vendor, but honestly, overall, it's that they want to listen, that they listen to you, that they don't just, they're not a robot. They just don't come back and say, I get what you're doing, but here's a checklist, right? Go down and check yes or no, and then we can move forward. It's having that conversation and knowing that they ask the right questions, that they are interested in what you are doing, that they are, whether they like it or not, they're interested in the product. I mean, I have a lot of banks that we bring a program to that say, oh my God, the program's amazing. It just doesn't fit our model, but we love what they're trying to do, right? So I think that that's the biggest thing is finding those people that really want you to be successful, that want you that understand and want to be your partner and aren't in it just because you're another income source for them.
That's a great answer. So I think we get some YouTube comments. Pink Dot, I need to talk to Joyce offline. Those stories they sound crazy. I want to hear it because I remember that era. All right, let's see another comment.
So yeah, you can spell the last names the same.
Oh, Matt Mehlman. That's your husband?
It's my son, and he actually
okay. Oh, nice. They have an interest in your end product and not just having a number.
I totally agree with that.
Nice.
And that came from PNC Bank, where he also was very frustrated because he saw these fintechs come in. He was in the biggest branch in New York City. It was one of their flagships, and they wanted to bank these types of customers. And PNC just couldn't figure out how to do that and didn't want to take the risk. And it was just a numbers game for them. So that's why I finally talked them into leaving and come with me.
Oh, that is awesome. That is awesome. I love that. Let me say something.
Yes, they should act as a mentor. Yep, they actually should. I mean, it's important, especially when you're a young fintech, to have those mentors, whether it's someone that you find outside of the bank or your vendors, or it is the bank, or, I mean, mentors come in many different ways and shapes and forms. Having a mentor is really good.
So, look, we can talk for a long time with Joyce. I mean, in terms of her infinite knowledge in the end-to-end process with launching a fintech and her very colorful stories from the banking. Oh wait, listen. Somebody else is saying Joyce will come back. She's a friend of the show. Goodness, we already talked about that. She's a friend of the show.
I promise. I'll be back.
That's all set in stone. Joyce, look, I want to thank you very much for your time today.
Thank you
Gracious
for
time,
having
because
me.
we went over the 30 minutes. I really appreciate that.
No problem.
How can people find you in iLEX?
So find me on LinkedIn. You have my name. My email is really simple. It's joyce@ilexconsultinggroup.com. ilexconsultinggroup.com. Sorry. And but LinkedIn is the best way right now. We're in the process of redoing our website, so it's just a splash page right now. We're working with a marketing company to get all our like handles up and all that stuff. But LinkedIn would be great.
That's awesome. Joyce, thank you once again. Thank you very much for your time. We could also, I think, guys, in the comments, whether it's Matt or Kyle, if you could put the contact information, like a link to Joyce, that'll be
guys, that would be great.
Yeah, put it in the comments. Everybody will then see it, whether it's on YouTube and LinkedIn. Listen, thank you very much. You have a wonderful weekend, and you take care of yourself.
Thank you. You too. And I look forward to being here again.
For sure.
All right. Bye, guys.
All right.